This is Alan Bush with the Daily Financial Forecast for Tuesday, May 7th. Stock index futures are mixed to higher this morning. We do have one report. That's the 2 o'clock Central Time March Consumer Credit Report, anticipated to show a $15.5 billion increase. So it does now look like the fundamentals and the technicals are becoming more bullish. What has changed is last week's dovish FOMC statement and Fed Chair Powell's press conference. Plus, we did have some inflation reports last week that did come in on the softer side, and we had some of the employment numbers also coming in weaker. So that suggests the Fed may be a bit more accommodative sooner, and of course that translates potentially into higher stock index futures. Moving over to the currencies, the US dollar index is trading a little bit higher this morning. Interest rate differentials have turned a bit more neutral for the US dollar index. Retail sales in the euro area increasing by 0.8% from the previous month, when up 0.6% was anticipated. Also, we had the Reserve Bank of Australia holding its policy meeting today, and they did keep interest rates unchanged as widely anticipated. And in the interest rate futures markets, futures are a little lower at the front end of the curve and higher at the long end. We do have some supply with the Treasury auctioning 2-year notes today. One Fed speaker, Neil Kashkari, at 10:30 Central Time. And the probability of when the Fed may cut interest rates has moved back in a bit. Now it appears that it's the September meeting when the Fed will be cutting rates. There was a few days last week where the probability had extended out to the November meeting. Also, I believe with what I'm seeing in the technicals and in the fundamentals, that futures at the long end of the curve will probably outperform futures at the short end of the curve. Also, the best longs appear to be stock index futures and gold and silver, with how things are progressing as far as what interest rates may be doing. So that's all I have here. Keep in mind, these are my opinions alone and are not the opinions of ADMIS or ADM.